So traders, the Fed announcement is coming out tomorrow, and obviously we know they're going to raise rates, but I want to share something with you that I think is probably, most people are thinking something about the stock market right now, but I'm going to be sharing something different with you. And yeah, so let's get straight into it. Don't place a trade based on what you'll see in this video, because there is no guarantees of making a profit in the market. It takes you a long time to become a good trader. So this video here is just to educate you to become a much better trader. Alrighty traders, so the big thing that's obviously coming around right now in the markets is obviously we've got the Fed announcement coming out. Now, if we have a look at the overall stock market right now, the stock market is obviously pulling back right now. And if we have a look at the overall pullback itself, let's go have a look at the weekly chart here for a minute. You can see we're down just slightly. We made a bit of a double bottom. On a technical level, okay, the big question is this: is this going to be some sort of a bottom and then a false breakout or false breakdown, right? End of trend indicator. If you guys remember, I talked about the end of trend indicator. If not, let me just quickly share that with you again. What tends to happen a lot at bottoms and tops and so on and so forth is the market will create, like here, the market will create a whole bunch of area of resistance. It'll actually break above that resistance or support on the downside. It'll spend a bit of time not doing much, and then it'll break back down. So it's a false break up. The question is this going to be one of those false breakouts? I mean, we got a bit of a move down first, because if we go have a look at this here. So if we go have a look at, let's go look at the Dow Jones for a moment, and the Nasdaq. All right, yeah, the Nasdaq was the one that I was watching. Like, this is exactly what actually happened with the Nasdaq, right? Look at this here. So we come down. This is the 2008. That was the low there. We made a slight lower low, and then it actually took off like a rocket. There's your double bottom, rejection, so on and so forth. So the question is this going to be one of those false breakouts? If so, we could get a slingshot move coming in the market. Now, when it comes to the Fed announcement, they are stuck in a rock and a hard place right now. They've got inflation. We've got inflation there, and inflation is continuing to persist. But just like everything, guys, and something I was doing a private weekly coaching session that I do every single week. I do a weekly coaching session with my coaching client. And oh, by the way, guys, if you do need some help, then in the link below, you can grab. I've got a free trading course that I'm giving away. It's a brand new trading course that I recorded a few weeks ago. It's going to help you with the biggest mistakes you're making, chart reading, strategies, trading systems, and a whole bunch more. So very first link in the description, guys, you can grab that free trading course. So the thing about what's actually going on right now with the actual market itself is the Fed's stuck in a rock and a hard place. Okay, the Fed is stuck between a rock and a hard place, because right now they see inflation where it is right now. Okay, now let me actually talk about the inflation side of things. I really do believe, just like anything in the markets, if you see anything, right, if you see any graph, any chart, if the market does that, like a hockey stick to the upside, does it just stay there? Like, let's actually remove the emotion side of things for a minute here, and let's actually talk about logic of how things work, how nature works, right? You look at the property market, look at an orgasm chart, right? Boys, guys, us guys, when we get to the peak of the orgasm, do we just stay there and just keep going and going? No, right? We come down real quick, and then she wants to cuddle, right? Same with anything, the property market, right? Even with us high, right? We might have a pre-workout, which I do. I normally have a pre-workout before I go work out, sometimes anyway. Or I might take a little bit of caffeine hit. Guess what? I've got the kick, I've got the high, I'm ready to go, right? And so guess what? I'm high, but guess what? I'm eventually what? I'm eventually going to at least come back down, aren't I? That's what's going to happen. So if we just look at, and again, guys, please remove your emotions and just look through history, through everything. Nature says that when we have a big moonshot in one direction, right, for quite some time, that it's going to correct. It's going to correct. I can't say that word, right? Correct. So it's going to correct. Oh man, man, I can't talk today. Correct. It's going to correct. It's like that is correct. It's gonna pull back, right? It's gonna neutralize a little bit, right? That's what happens through history. So we've been seeing the inflation data and the inflation number being absolutely just crazy. Oh my goodness, inflation. Oh my goodness, inflation, right? So let's actually bring up the inflation numbers here. Oh, here we go. Right. So let's actually bring up the inflation numbers here. Let's actually go to the maximum here, right? We're seeing this massive spike here. Can we go max, right? We're seeing these massive spikes here. Again, guys, remove your emotions. Who cares about your emotions in the markets? Let's look at logic. Let's look at the facts of what's happening so we can plan properly instead of looking at the headlines of what's going on right now. Now, by the way, yes, we did get a negative GDP, right? So if you do think that based on the rate announcement, the negative GDP, if you think the government, the Fed's not going to continue to raise rates all through this year. They're just not going to do that, right? Why is that? Because like we're already getting a negative GDP, right? And the bond market is already doing the tightening for them. You've probably heard this a million times from other channels as well too, right? So the thing is the government is already doing the tightening for them. Sorry, the government. The bond market is already doing the tightening for them. So the Fed, I don't believe the Fed is going to continue to hike rates throughout the rest of this year. Maybe there are a couple, or maybe, yes, we're going to raise rates this time. But I believe, leave a comment below. Let me know what you think. But I truly, honestly believe that they're not going to continue to raise rates all through this year. I just don't believe they can, right? Unless they really want to send the market into a recession, especially with the first negative GDP. And then now China, I think I just read this today, China's in a recession as well too. China recession, inflation spike, what's going on? So look at this here. So whenever we do get a spike, right, doesn't mean we can't, I'm not saying right now, but doesn't mean we can't, there's two thoughts that went through my brain just then. Okay, here we go. The thing is this, is that I do believe that that it doesn't. We could still go through a bit of a movement for the next couple of months on this inflation move, right? We can do something like that. But what happens every time we get a massive spike in the inflation? What inevitably happens? We come back down. We come back down. We come back down. We come back down. There's going to be an inflection point when inflation comes back down. And guess what that's going to do to the stock market? It's going to be what? It's going to be bullish for the stock market. It's not going to be bearish for the stock market. It's going to be bullish, right? Because so many people are worried about the inflation right now. Oh my goodness, inflation. Inflation is transitory. Now, it's been persistent a lot more, but we are going to see an inflection point in the markets and we are going to see a pullback. It's just going to happen. It may take another couple months for that inflection point to happen, but I honestly do believe that the second half of this year, we're going to start to see that. And along with that, there's not going to be, oh, look, inflation's starting to drop a little bit now, et cetera, right? And then boom, here we go, stock market boom. So firstly, the Fed's not going to continue to raise interest rates right now because right now they're looking at the data right now. The data is saying, listen, here we go, right? Okay, we're in shit. we just started raising interest rates in the market, and we're about to send this market into a recession. It's like, oh, okay, and then now they're trying to raise interest rates to combat inflation. But again, guys, just through the nature cycles of what's going to happen, we're going to see the inflation drop back down. And then when that happens, guess what's going to happen in the stock market? We're going to see an incredible rally. Again, guys, it may be June or July that we really start to see that inflection point coming in the inflation number. And then when we start to see the inflation number, then guess what? When it starts to come down, it might be June or July. But then the rest of the second half of this year, guess what? Down. The prices are down for inflation. Up. You know, the numbers are up in the stock market. We are getting ready, I believe, for one incredible move on the sidelines. Now, here's a big thing that a lot of people say, John, but you know, the liquidity has all been dried up. There's no liquidity now. You know, where's this liquidity going to come from to send this market to the upside? Firstly, have you actually seen? I don't have the chart here, but have you actually seen the fund managers, stuff like that, have got more cash right now than they have in a while? That's the first thing. Secondly, do you realize there was only a couple of years ago that 40% of all the currency printed that's out there right now, 40% of all the currency printed didn't exist prior to 2020. So we've got what, an extra 5, 6, 7, whatever $trillion, right? out in the marketplace. It's not like that liquidity just dried up. No, right? It's like, but the liquidity's gone. It disappeared. Oh my goodness, we need more. No, it just keeps circulating. That's the reason why things are the way they are right now, right? You see cashes and banks and, and so on and so forth. So it's not like the liquidity is actually dried up. No, a lot of fund managers are cashed up, and there's actually a lot of liquidity on the sidelines waiting to get this inflection point. And then it's going to come rushing back in, and then we're going to see an incredible move to the upside. And that's where the inflection point is coming, okay? The inflection point. Now, guys, what I'm talking about here right now is the big picture here stuff, okay? We've got the Fed announcement coming out tomorrow. We've got the Chinese crisis. We've got the inflation spike, all that sort of stuff, okay? If you are interested in actually learning actual trading systems to trade for income, what I'm talking about here is more like investing approach. Buy, hold for a couple of years, right? Who cares what happens this week? I think the second link in the description, I'm actually doing a sale for my 4 top trading systems for $4. So if you're after different trading systems, you can actually get that sale in the link below. But that's what I'm seeing there right now, guys, when it comes to the inflation number. And that's the reason why, we may have a little bit more downside to come in the stock market. Actually, firstly, we are getting very, 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 very extended on the downside. So at least a little bit of a relief rally is likely to come. Why? Because the market just doesn't keep doing that, right? Not the S&P or the Nasdaq anyway. Maybe stocks. Maybe Netflix, right? So we're likely to get at least a relief rally out of this market. At least a relief rally. Depending on what happens if this rally that's coming real soon, if that's a 50% and then we roll over, that's when the danger comes in, because we're just like, oh my goodness, and especially if we start to break through. That's like, oh my goodness, we still have a lot more downside to come. But if the relief rally comes, okay, because look at this here. We're on the market drops, pulls backs, drops, pulls backs, drops, pullbacks. You get it, right? What's going to happen here? Are we going to start to see a bit of a shift in the market? We had a drop. If we do get a relief rally, but we get a relief rally like that, and then we start to create a higher low, what is this doing? We're starting to what? We're starting to create a bottom, and the buyers are coming in. If you are looking to get into the stock market, wait for at least the market to start to change tune, right? Wait for the market to change tune. Yes, I believe we're going to see a 5,500 on the S&P 500. Let's go to the S&P 500 again, right? S&P 500. Yes, I believe we're going to see a 5,500. Where are you? Come here. Oh, by the way, see that line there? If you pay your software, they tell you exactly where the bottom is. Just joking. I believe we're going to be up here by the end of the year. Now, as I said before, guys, that the everything I've said in this video says that we're likely to get an incredible move on the second half this year. For the next couple of months is like, that's the inflection point happening and all that sort of stuff, right? So we can see what's happening through there. So and again, the big pattern I'm looking for, again, guys, if you're looking to see, is the market likely to then start to make that big move or not? We're likely to start to go back into a strong uptrend. What does that look like? Okay. I'm talking about big fundamentals today, but also when you overlay the fundamentals, this is the big picture I'm expecting this year. Okay, cool. What's going to be the starting point to see that big move up? A what? Trend. Very, very, very simple. So we're likely to get a very strong move. Now, if we do, guys, okay, if we don't, we get that and we get a lower high, guess what? This is a major topping pattern and we're going all the way down. That's just what the market says. Even though I believe we're going to the 5,500, that's what the market's telling us. If we do get this. Now, if we do get the opposite, and this is the big thing I'm watching for, if we do get the opposite, which is a very strong move up and then a nice pullback, guess what? We're now starting what? A beautiful upward trend. That's what here, look at this here. Higher low, 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 higher low. Now we're getting a slight downward trend. Now we're actually getting to what? No one in control. There's no one actually in control right now. So we're in for an upward trend to sideways. Are we about to see this? And if we do, guess what? It does not matter what you think, what you hope. The market is going to do what the market is going to do. And if the market starts to do this, we're going to start to see a real big, strong move coming into the stock market. And if that does happen, guys, I believe we're getting very close to the next few years to having a recession. I don't believe it's going to be right now. Okay, the data doesn't doesn't support that anyway. Not right now. Actually, the second quarter could be like negative, and I just get mud on my face. But anyway, that's just what I believe. So looking at actual gold and silver, I honestly believe with gold and even with the gold market, right, that we could be getting ready for this second half of this year. It could be an incredible move, especially if we do get the inflection point with the inflation. I believe gold's getting ready to have a really incredible move to the upside, a big breakout. When I say about to, like, you know, is it going to start this next couple weeks or whatever? Okay, so that's what I'm seeing through there. And also obviously looking at the mining sector is actually holding up quite a little bit here. We are actually right at that level there, right? So now we're holding just a little bit through here on the mining sector. The big thing that I'm looking at for is that when we actually see the big bounces, and as you can see that if we have a look at the GDX here, you can see how that we've actually had a lot. This is the big picture here, right? Looking at, we've had a lot of resistance all through here, a lot of resistance. Now we're at this major inflection point right now, and I do believe that this is going to be a movement up, and all this major resistance is going to become support. And when we come support through here, we're likely to see a movement to the upside in the gold and silver market. But leave a comment below, guys, and let me know what your thoughts are about everything I've talked about today.